It's about -10%, not as good as some of the developed markets, but not as bad as some of the commodity emerging markets. Nigel D'Souza is here to give us the lowdown on how the Indian markets did in FY16. Nigel.
Well, Lata, the FIs, they didn't bail us out this time around. So in the financial year that's gone by, they sold close around 2,000 crores approximately. As you said, yes, the Nifty has lost close around 9 to around 10% in the last 1 year approximately. But in dollar terms, if you just take a look at it, the Sensex has lost, in fact, 15%, taking into account the rupee depreciation as well. The big index losers up for you on the screen, we have PSU banking stocks, metal index, as well as the farmer index. All of them have got smacked. And look at the Nifty losers. Just look at the commodity-driven stocks. They are the biggest losers. So Vedanta and Hindalco in there. Defensive stocks this time, they didn't bail us out. So we had the likes of Cipla as well as Tech Mahindra in there with losses of around 25 to around 30% approximately. Banks and financial stocks as well, they got hammered, some of them, because we had the likes of PNB as well as SBI losing between around 25% to around 40% approximately. And big boy HDFC as well took a knock of closer around 15%. The other big losers are flashing for you. L&T lost closer around 30% of its market capitalization in the fiscal that went by. But thank God for Reliance Industries, because that stock really supported the Nifty. It gave you returns of more than 25%. So that's what really prevented the Nifty from falling apart. But from the broader markets, there was a relative outperformance because we had the mid-cap index that was down only around 3%. And the big winners are flashing for you. Indocount gave you returns of more than 150%. We have Petronet as well in there with gains of more than 40%. And from the broader markets, JSW Steel from the ferrous space really stands out. That gave you returns of more than 40%. Switching to the losers then, some of these highly leveraged counters, they got beaten. So JP Associates is in there. We have JSPL as well, that got smacked. And some of these banking stocks as well, the likes of Orient Bank, Bank of India, they have got hit. But let's finish off on a very positive note, because we had some of these small cap stocks, a couple of sugar stocks that gave you returns of close to around 900% as well. They are flashing for you on the screen. From the broader markets, some big gainers. Back to you.
Thanks a lot for that neat roundup, Nigel. Well, the short point from the market has always been that even if commodity stocks were generally punished, there were outstanding people, those who could stand out in spite of a bad trend, like JSW Ferrous, which being a ferrous stock still did exceptionally well. Likewise in the banks, the wide variety of performance shows